Yeah. The next question, Naren, is you began as this is about how investors change as they evolve and grow. That is something which is very fascinating. You began as a bottom-up investor and later adopted to top-down remarkably well. And you were instrumental in creating products for both bottom-up when you did discovery and now top-down when you've done BAF as well. How do you see the future for each of these, bottom-up and top-down? Because for some periods of time, top-down investing works better. For some periods of time, bottom-up outperforms significantly, like you did in discovery during those very difficult years. So how do you see the future for bottom-up and top-down in the institutional field?
See, I think as long as I'm a CIO of a mutual fund, I need to be both top. I need to be top down. But when you are a individual investor, I would say that if you are bottom up, that would be sufficient. That is how I look at it. That would be sufficient in my opinion. Because the way I look at it is a bottom-up investor doesn't need to normally invest 10,000 crores. And so what happens is that bottom-up investor can look for good ideas which suits them. And they can stick to that. And they don't need to invest large sums of money. And so what happens is that in 2008, when we lost very big sums of money for our investors, we went back and asked ourselves, what could we have done better? And at that point of time, we realized that the only way in which you can actually guard people is by looking at it both top down and bottom up. And so that is why we had to become top down and bottom up in my job. So, for example, in 2017, we were clearly very cautious on small and mid cap, and we conveyed it very clearly. And in 2018-19, we did try to convey to everyone that people should invest in debt funds. The reality is that at this point of time, for example, the large caps, the mega caps are very costly at this point of time. The reality is that these are messages that can come out of a top-down view. But is it necessary for a individual investor to bother about it? Because an individual investor can identify 10 stocks where they can invest 20 crore rupees if they want to, or 2 crore rupees, or 20 lakh rupees, as the case may be, and not bother about what is required. Whereas for me to convey to people in 2017 that small and mid caps are overvalued, today, for example, that mega caps are overvalued relative to the market, is useful for me to convey because of my job. So I would say that individual investors can avoid it, but I think individual investors need to practice asset allocation along with small cap, along with bottom ups. So if they say I will do only bottom up, but I will not do anything to do with asset allocation, then what happens is then there'll be a year like 2008, or let's say if you're a real estate investor, whatever you would have done, you would have lost money between 2014 and 20 unless you are only in commercial. So that kind of risk does exist, and that is the challenge at this point of time. And I would say that there is no problem. If you're an individual investor, maybe you can stay with just being bottom up. But as you become bigger and bigger, it makes sense to have some top-down influences. But if you have asset allocation influences, that itself is enough.